I don't want every month, like, man, I have to be 100% full or I'm not going to be able to make the bank payment. Like, that's a life I don't want to live. Like I said, I bought the place for like $250,000, believe it or not. I didn't know that people lived in those kind of conditions in the United States. I was really shocked. There were holes in the wall that you could put your hand through to the outside, and there was a little baby sleeping on the floor.
We just experienced that. We cost seg one of the deals we bought last year, and it basically wiped out my taxes. And I was like, whoa, this feels illegal or something.
I say the same thing all the time. I say, is this even legal?
What's going on, everybody? Welcome to another episode of the Commercial Real Estate Blueprint Podcast. We have Ashley Garner with ABG and Associates. He's based out of Wilmington, North Carolina. He's a big multifamily guy. We got connected to him through Commercial Academy, actually. I think we first met in Raleigh earlier this year, and then again in Cleveland. And we said we got to have you on the podcast because he's presenting a pretty awesome and big deal that we want to talk about later in the episode. But thank you for coming on, Ashley. We appreciate it.
Yeah, thanks, Graham. And Jesse, you too. I'm happy to be here. It's a pretty cool opportunity.
Yeah, absolutely. I was asking you this in Cleveland, but are you from Wilmington? Did you move to Wilmington recently? Or not recently, but when you were?
Yeah, I'm not from Wilmington. I'm originally from like Salisbury, Lexington area, North Carolina. Mm-hmm. I grew up in Morgantown, West Virginia. My dad started a bank there when I was 6 years old. So my immediate family moved there. And then I lived in West Virginia basically until like 20 years ago when we moved to Wilmington. I knew Wilmington actually my first year of college was at UNCW in 1989. So that's a long time ago. It's changed a lot since then.
Yeah. My sister went to UNCW and I grew up going down to Wilmington, and I love Wilmington.
It's awesome.
Still talk about it all the time.
Yeah. We love it. Love it. Love it.
Yeah. We try to cold call properties there just to have an excuse to go down like to the beach. And, yeah.
I don't blame
especially
you.
in the summer. Yeah, that's
blame
cool.
you.
Well, for the people who don't really know you, give us a little brief introduction and kind of your background.
Yeah, thanks. So, like I said, I grew up in Morgantown, West Virginia. When I was kind of that junior high to high school age, that's when my first real memories of it are. My dad started buying these old houses near the campus of West Virginia University. And then he would internally subdivide them into multiple units and rent them out to college students. He ended up with a pretty nice portfolio right in the old part of the downtown, which is just a few blocks from campus. So I grew up literally in this business, in the literal mom and pop version of this business, with a hammer in my hand and doing all the work. And then into the management and the financing and the acquisitions and all those kind of things. And as a matter of fact, we still own many of those houses. So it's been an interesting learning process for me, but that's kind of how I got started in the rental business. I grew up in it. Then when I kind of moved out onto my own phase of life, and I got my real estate brokerage license, in North Carolina back in 94, I think it was. Mm-hmm. And I worked in the residential real estate business for a long time and also started buying rentals on my own. And I followed the same path that a lot of people do, which is a single family rental, or actually I tried to flip one and it didn't work. So I had to rent it. It turned out to be a great deal, but you figure it out. But single family, duplex, triplex. And then it was working so well and I loved it so much, I decided to go a little larger. So 10 unit, then 32, 37, and now 196 unit property.
And when you were doing that, was that in West Virginia or was that in Wilmington?
When I started buying them on my own was mainly when I got to Wilmington.
Okay, yeah. Nice.
The 10 unit place I bought in 2013. And so we all remember, well, you guys are too young, but in 2013, the real estate market wasn't real great. And that was actually a short sale that I bought. $25,000 a unit, I think it was.
Oh, wow. In Wilmington.
In downtown Wilmington. And it's worth...
That's nuts.
It's worth many, many times more than that now, I'd say.
Yeah, that's nuts. I was graduating high school, and in 2013 is when I graduated high school.
Okay.
I wasn't in the real estate game yet. I wish I was, but I always see those memes of people where it's like, I wish that I was buying houses when I was in kindergarten and stuff like me. I'm like making jokes about stuff like that.
That's right. But it's funny though, not to get sidetracked, but like today is kindergarten. Like that's the same thing's going to happen 20 years from
Yeah.
now. You're going to look back and say, man, I wish I bought something in September of 2025.
100%.
It's just that kind of business.
100%. Yeah. And two, I mean, I think I've been talking about this for a long time. This is just my gut prediction, but I was saying, since the beginning of the year, I was like, I think there's going to be like an adjustment period. And then towards the end of the year, they're going to drop interest rates and it's going to go crazy again. I'd be curious what your thoughts are, but that's my prediction. They've been saying it forever. They're going to drop interest rates, but now they're like, in September for sure, they're going to drop them. I don't know. It could happen. It might not. I think it probably will. And the second that happens, I think it's going to go crazy again. This is my personal opinion, like with brokerage, because we're in the brokerage business, and then sellers are actually going to sell again. Buyers are going to come back to the market, which it's a good thing, but it's a good thing for the brokerage business. It's a bad thing for investing because it's going to be very hard to find good deals. This last like 4 years have been awesome for finding deals and seller financing, stuff like that. So I'm curious what your thoughts are on that.
Yeah, I think you're probably right that they're going to lower the Fed rates. I still am not real sure what's going to happen to things like the 5 and 10 year treasury, which a lot of this, the stuff that I'm borrowing now is all based on that. And so I'm I just don't know what's going to happen, but with those rates. But I do agree that when they lower the Fed rates, that the buyers are going to really flood, and there's just not enough inventory. I mean, bottom line is there's not enough houses for people to live in, especially in North Carolina, places like Wilmington and Raleigh. So the prices, I think, are really going to jump, and the values. So if you're an owner of assets, I think this is going to be really in your favor.
Yeah, I think so too. And we've been fortunate the last year. We bought all the stuff we own in terms of commercial. And, hopefully, like you said, it's going to go up a little bit. But I'm curious. So do you still own those properties that you kind of the portfolio that you acquired of residential stuff in Wilmington, or did you sell them and switch into the bigger stuff? Or
yeah, so I sold all of the single duplex and triplex. I still own the 10 unit place, and then the other larger ones. And those, I'm grateful for the steps that I took in the journey, for sure. And each one of them helped me like step up to something different. They helped me buy the next one and grow. And then the ones that I still have, like the 10 unit place, I have refinanced that thing 3 times, cash out refinance 3 times since 2013. And it's helped me buy millions of dollars of property since then that I've bought and sold with basically none of my own cash. Like I didn't have to go into my savings account to get it. I just used the equity out of that to buy it. And to me, that's like, it's like this such a jackpot. I mean, I analyze it. I'm like, oh my gosh, I can't even believe that this is really allowed to happen. It's just amazing. So yeah, I mean, I'm 100% hooked on all of this stuff for sure.
Yeah. Let's dig into that a little deeper, because me and Jesse are in the beginning stages of, trying to scale. And I think the people who are listening to this, either maybe they bought their first deal or second deal, maybe they're trying to get started. And obviously one of the biggest hurdles in the beginning is capital. And what you talked about is what I've heard so many of my investor clients and people who are friends. And that's a way they've really scaled. So for people who don't really understand how that works, kind of give us an example of how you can buy something, refinance, and then go on and buy something else.
Yeah. So, on that particular case, the 10 unit place, I bought it and I bought that one with my own money. I did go into my savings account to buy that initially, but it was pretty reasonably priced and it wasn't a huge heavy lift. I was able to refinance in some of the renovations and finance in some of the renovations into the initial purchase. So then once I bought it, renovated it, filled it up, stabilized it, I think it was probably a couple years later, and the market played in my favor. Values went up and rates went down. So the timing was right. And I was able to move it from one bank to another and get some cash out. When I did that, of course, the important thing there for me is that, I bought this thing because it was good cash flow, and I'm very conservative. So it has to work. I don't want to buy something that stresses me out. I want to buy something that covers the debt, that makes money, that makes cash flow, and I can actually see it in the bank account kind of growing each little bit each month, right? And so the rents went up on this property along with the values, and the rates went down. So in other words, I was able to buy it. And in some cases, in some of those 3 times of refinance, my monthly cost of owning it actually went down. Believe it or not, I got money out and paid less for it each month. Just mind blowing stuff. Now that's all market driven, and the conditions have to be right. I wouldn't. So let me show you the flip side of it. right now I've got a mortgage on that same property that's got like 24 months left at 3.75% fixed interest rate. Well, I need to refinance it at some point in the next 2 years, but I don't want to do it today because I'd be paying like 7%.
Yeah.
And so it wouldn't work today, but when I did it, it worked great. Then I used that money as a down payment to buy something else. So really, if I look at my own little savings account world, it didn't affect, like I didn't take any money out of my personal life and was able to buy a whole new cash flowing asset. So I increased my income without spending any of my personal money.
Yeah, that's incredible. What sorry, I'll ask one last question, Jesse. What do you recommend people on like the LTV side? Because like you said, you're very conservative. So for people who don't fully grasp this, because I didn't in the beginning, but like let's say you have $1 million property and you put 30% down, and it's $300,000, and then it appreciates to 1.2, and you pull out more. Your loan to value, like you're borrowing money, you're taking cash out, but really it's just in the form of a loan. And it's not a big deal because your tenant's going to continue to pay it down. It's not you, as long as it's cash flowing. But you are taking on more debt. So like, what do you recommend somebody doing, like when they pull out the LTV? Obviously the bank won't let you take out 100%. They have to keep a certain LTV based on the value, but what do you try to do?
Yeah, I mean, I'm okay with that 70 to 80% range usually. But for me, like I kind of rely on the banks too. The banks have, to an extent, I've never been faced with this. They've never offered to give me 100% and like over leverage something. They've always, like the situations I've been in, the banks have always been pretty conservative. So they weren't going to loan me, especially on a cash out refinance. They're not going to loan you much more than maybe even 70%. And so that's okay. But their underwriting was so conservative also that the debt coverage ratio was high enough. Like it really wouldn't go wrong. Like if they approved the loan, I knew I was okay. And I know the math enough that my math agreed with their math. But so I probably wouldn't have borrowed more than that, even if I could have, mainly because, like I said, I don't want to be stressed out. I don't want every month, like, man, I have to be 100% full or I'm not going to be able to make the bank payment. Mm-hmm. Like that's a life I don't want to live. Yeah. That's too stressful for me.
So I was 100%. Curious, going back to that first refinance, how much money you put in and how much money you were able to refinance back out. You did the cash out, if you don't mind sharing.
Oh, goodness. No, I don't mind sharing. I just don't know if I remember exactly. But like I said, I bought the place for like $250,000, believe it or not. And it was really, we'll do another episode on that. But unfortunately, I was naive enough to know that I didn't know that people lived in those kind of conditions in the United States. And I was really shocked. Like there were holes in the wall that you could put your hand through to the outside, and there was a little baby sleeping on the floor right inside that room. And just like stuff like that just kind of blew my mind. So when I bought it, I had to get everybody out, renovate it. So the 250, and I think I put another roughly 200 into it to renovate it. But like I said, at the time, I was able to do kind of the loan to cost on the initial purchase. And so that allowed me to borrow most of the money that I had to use to put into the fix up. So I think I put in like $75,000 of my own money on the initial purchase, which to me at that time, and still is, by the way, like that's a lot of money. So I don't want to make light of it. Like I was scared to death. Like, oh my gosh, am I going to really do this and put my family at risk? Like I was nervous.
Yeah.
But the math worked, and I knew like, okay, I know I could rent it and conservative rental rates, and I, make sure to use the 7 to 10% vacancy factor and a property management factor. And I used all the conservative math. And so I knew if it worked on that paper being that conservative, that I had a pretty good chance of making it work in real life, or at least breaking even. So then when I went to the refinance, and I'd have to look back and see exactly how many years after, but it was another $250,000 at least that I got out of it in cash on top of the, refinancing the initial debt. But that's how much the value had gone up. And that's how much the rents had gone up, so that I was able to still keep
that's
my cash
amazing.
flow.
You put in $75,000 and a couple of years later, you'll be able to refinance out that and more. Yeah. That's just wild.
It's amazing.
You mentioned you'd sold a couple properties to help you buy the next one. Was there any that you regretted selling?
Yeah, all of them. No, I mean, I say that funny. Like I wish that I still owned them. Real estate is that game that most of the time, the values are going to increase. And I'm being kind of a smart aleck, but I don't really regret selling them because it helped me get to the next step. I do remember this one time my wife and I had this discussion about, I'm like, honey, we've got plenty of money. It's fine. Don't stress out about it. Everything's okay. And I said, see on this balance sheet right here, it says all these assets are worth all this money and this is our equity. And she said something to the effect of, I don't care about all these statements. Yeah. She's like, I want to see the money. So we bought one. We sold one that we had. I think this was a triplex in this case. And I said, okay, well, we'll sell this one and I'll show you, like right there it is. And I think it was like the day after we closed the sale, we both were like, okay, well now what are we going to do? We got to go buy something else. So you really see the power, like, holy crap. Like, even if I did sell it and tap the equity out, what am I going to do with it? Yeah. I'm going to go buy another investment.
Well, Graham and I are in the process of potentially selling our duplex. We got it listed for sale right now. The first thing we bought, is a duplex. The reason we want to sell is we want to focus on commercial. We've bought a lot of industrial and we want to continue to buy industrial. It's technically in my name only right now. And so we're thinking about selling it so that we can focus. But, you're right. We sold it and then we're like, ooh, now we have a tax burden. Now I have to go buy something. We have bought other things that we can cost seg and help with that. But the regret is also a question as well of whether we're going to regret selling it.
Yeah, I'm wondering. We go back and forth on it because it's a great property in a phenomenal location in Durham, and the fact that we got it was like one of those. It's not like it's impossible, but it's one of those perfect scenarios where an older gentleman wanted to sell it, wanted to retire. We got it at a very low price, relatively speaking. So I'm like, it's like, should we sell it? I don't know. We got it listed right now, but we don't have any offers on it. We also listed it aggressively on purpose. So we'll see.
If you can take the money, the equity that's in there and help you step up get to your goals or make a better return than you're making now. I think it's okay to sell stuff. That's something that I am still learning very much. Like, I don't like to sell stuff. And I know I inherited that from my dad. Like, he never wanted to sell anything. And I, being young, I'm like, well, man, just think all this money we could have if we would sell all this stuff. And now I'm realizing, like, okay, but then your income stops and you got to pay taxes and all these things. But at the same time, we hear Scott and people at the Commercial Academy talking, like, if you can make 10 or 20 years of income right now, then you probably should do that. And I've got some of those situations that I myself I'm in the same shoes as y'all. Like, should I sell this or should I keep it? I go through that exercise often.
For sure.
Yeah, I think a lot of owners do. I really do think so. And I think it's also depending on your goals. Like, like you said, you might sell it and cash out on 10 or 20 years, which is amazing. And you could put it into the next thing. But at the same time, if it's cash flowing well, it might be worth that peace of mind of like the cash flow coming in. Yeah. Like, I was talking to one guy in the group and he was like, yeah, I sold it. I sold this building because I made so much money on it. But that money has a horizon on it. Like, I can see it coming to an end. Like, before it was just cash flow. It was never ending. Right. He's like, I did not like that feeling at all. And I regretted selling. So I'm like, oh man, that's just something to think about. And like you said, it depends on your goals. And the other thing too, I think that's important is like how much effort and work it takes to find a good deal. Because I think you can find a good deal all the time. I don't think it's like market dependent, but it is a lot of work. Like, the amount of work you have to do to find a good deal. Like I was saying, if interest rates go down, the amount of work we have to do to find a good deal is going to go up so much versus right now. Sellers are having to be more flexible, so better deals are out there right now.
Yeah, you're exactly right. But I guess we have to remind ourselves that if we make money, we've achieved our, that's what we set out to do. And you can make it either selling it or keeping it and all those things. Maybe you do some, keep some, sell some.
Yeah. That seems to be like what a lot of people do. And like you said, it's just a level up. If you can sell something, and level up.
Yeah, for sure.
That's ideal.
That's the name of the game. If your current holdings can buy your future holdings, it's amazing. Like, if you really think about it in that scope, it's like this infinite return. You don't have any of your own. Like I say to myself, I don't have any money in this deal at all, and I keep getting a check every month. It's just, it kind of like blows your mind.
I know. It's insane. We're new. Like we had residential stuff before this, but we're new to the commercial. And, I texted Jesse and our other partner about one of the most recent deals. Like, guys, we just got, the direct deposit rent came in, and it's like, yeah, you talk about it. Yeah, real estate, people pay rent and stuff, but you see it in your bank account. It's like, this is literally insane. I cannot believe this is real.
Yeah, it is. It's so amazing.
So let's think back just a little bit, going back to like your first deal. And if you were to advise somebody on how to get started in commercial real estate, maybe buying their first fourplex or something like that, where would you start? And what would you buy maybe?
Well, that's always the tough part, I guess. How do you find it? I know, Graham, you just mentioned it. That's a challenge to find things. I was and still am in the real estate business, and I'm kind of connected to that world. I spend a lot of time in meetings in the MLS and hanging out with brokers, and people know, like, when something hits the market, they know I'm involved. And so I kind of hear about it. I'm thinking back, most of the things that I bought were either listed or were somehow connected to the brokerage world. So it's through a relationship. And I've had listings that I bought, and I wrote the letter to the guy. I said, look, I know this thing isn't selling, but I'll give you an offer. And, you have to make that disclosure. Like, I'm going to offer you this. It's lower than I think the market value is, but I can close it in 30 days and pay you cash and blah, blah, blah. And he's like, okay, I'll take it. Things like that. And you just have to keep swinging. There's always a way to do it. I've purchased some with direct mail to sellers. I've purchased some directly on the market, like off the MLS from brokers. Just kind of all the different ways. The best deals I've bought probably were either a distressed situation or a direct to seller.
Yeah.
I mean, that's like the biggest margin that I've bought has been those.
100%. There's deals out there. Like I said, there was a deal I was chasing in Durham, and it was a phenomenal location close to downtown. Was talking to like another broker presented me the deal off market. He like made a little mock flyer for it, and he sent it to me. We made him an offer at like 600 or something, or 550, I think. And they were the seller was wanting to get 7 or 750.
Right.
And I've been following up with this guy for like a year and a half. Like, hey, and he ultimately decided not to sell it, but we couldn't get to 750 anyways. But I kept pinging him like, hey, will he sell? Will he sell? Will he sell? Like maybe like every other month or something, saying we'd still be interested. Guy emailed me yesterday. He was like, hey, something happened with the seller. I think he got sick or wanted to retire. He sold it to the church next door. I was like, dang it. And I went and looked on the tax records yesterday. He sold it to him for $350.
Oh, whoa, what?
Yeah, I was like, goodness gracious. So stuff like that happens. And
it does happen.
There are sellers where there's that's such a prime example for people listening. Circumstances change. So like if you're cold calling or sending letters or whatever it may be, then the chances of you catching that person on the day they want to sell is like next to nothing.
Right.
But you gotta keep touching them. So you reach out to them once a month or at least once a quarter. And then, they might say, no, I won't sell. No, I won't sell. No, I won't sell. They'll tell you 3 or 4 or 5 times. But on the 6th time, they just got a divorce, or somebody just passed away, or they want to move to the beach and retire, or whatever it is. There's some kind of circumstance where they're like, you know what, I will sell now. And they know you've been following up so many times that they might not reach out to you, but if you call them again, then you could be the person to get it. And I think that's like the best way to do it.
I agree. I remind myself of that all the time. You have to be consistent. You can't give up. You really have to just stick in there and do it, because you're right. You have to be. It's kind of like you get all these emails in your inbox from J. Crew or Pottery Barn or Best Buy or whatever, and they come like every day almost. And it's all usually delete, delete, delete. But the one time you need to buy a new TV and that Best Buy ad pops up, you see it and you're ready. And it's the same exact. That's why they are so consistent and it works. And that's why we have to be the same way if we're going to use that tool in our business.
100%. And the other thing too is like, I think successful investors do that, but there's not many successful investors, honestly. And the general buyer out there, like, just looks at something and thinks, oh, it's overpriced, I'm not going to make an offer. Or, oh, it just popped up in the market, I'm not going to make an offer. But I tell my buyer clients, I'm like, make an offer where it makes sense to you. They probably will, they might not say yes since it just got listed, but if it's sitting in like if it's sitting like 3 months from now, guess who they're going to call to try to work out a deal?
Right.
It's going to be you. And so like, no, people, like, that's happened to me so many times where we'll make an offer and they're like, nah, we won't accept it. And then you keep pinging them like, hey, did this sell? Did this sell? Did this sell? A year goes by, the building never sold. And next thing you know, you're negotiating an actual deal with them because you just like were talking to them and engaged them.
Right. Absolutely.
I was going to ask you about when you started in single family. I think a lot of people do, and people want to invest for cash flow. Do you recommend, if somebody has maybe a little bit of money or maybe has a partner that has money that wants to get into real estate, to just go straight into commercial assets, so 4+ units? Do you think that that's attainable to just go straight into 4+ units?
Yeah, I do, because the math is more powerful. Like there's more income there. But at the same time, like you hear all these investors and they'll be interviewed on a panel or on stage. Like, what would you tell your younger self? Like, what would you do differently? And they'll almost all say, oh, I'd go bigger, faster. I'd go right into the apartments, because they've achieved that. And now they know the power of it and they've got their head around it. But if I think back in my own journey, I would like to go bigger sooner. Like I'm 54 now. I'd like to be where I am when I was 34. But, for whatever reason, I took that, that was my pace. But you learn you learn something each time and you become more comfortable with it. I think for me, yes, I would go into it. But if I look back on and give advice to myself, I would have maybe not tried to do it all by myself. If I could have find somebody that was like me or like you guys that had already kind of done some things and say, I want to get in, I want to do this. Can I do a couple with you? Or can we at least have coffee once a month and talk about it? And so, I was just kind of like doing it. I thought I have to do this all myself and I have to use my own money and I have to find it myself and run it myself. And that just really slows you down. The real way to speed it up is not necessarily going and buying like a 10 unit right off the bat, but it's learning from other people and using their experience to get you somewhere faster. That's what I think is the real key.
Hey guys, it's Graham here. I wanted to tell you about a guy named Sean Katona. His story will absolutely inspire you. Sean was grinding as a house flipper, doing decent in the business, but hitting a ceiling on his income potential. That's when he discovered J. Scott Shield and Commercial Academy. Scott showed Sean that the skills he already had could work in commercial real estate. It's the same game with just bigger buildings and bigger profits. Sean dove headfirst into Scott's training and completely transformed his business. Today, he's closed over 80 transactions and built the kind of portfolio that gives you true financial freedom. But Sean didn't stop there. He became so passionate about what he learned that now he's teaching others as a Commercial Academy coach. Sean created a complimentary masterclass where he shares his key insights that change everything for him. This isn't a theory for someone who's ever done a deal. This is real world wisdom from someone who's been exactly where you are. Ready to learn from someone who's walked the walk? Text Sean Masterclass to 888-653-1199. That's Sean Masterclass to 888-653-1199. Sean proves it only takes one deal, one time to change your life forever. And he wants to show you how.
I'm going to have to stop you right there. It's time for you to go all in on your commercial real estate dreams. Commercial Academy just dropped Fast Track. And honestly, this thing is a complete game changer for newbies. For one crazy low monthly price, you're going to get J. Scott Shield's comprehensive home study courses, which are decades of proven strategies recorded by Scott himself. They're going to be available to you the moment you get into the course. 2, you're going to get the powerful deal crunching software, opportunity evaluator, and quick checks. So you're going to be able to run numbers like a seasoned pro in minutes, not days or even weeks. And this is just icing on the cake. Your Fast Track membership comes with a free ticket to the next Commercial Academy live event. That's your golden ticket to learn, network, and be in the same room where it happens. If you've been waiting for the perfect time to start, honestly, there's just no other better time to get started. This is your golden ticket opportunity. Remember, it takes one deal, one time to change your life forever. Text Fast Track to 888-653-1199. right now. Again, that's Fast Track to 888-653-1199. Commercial real estate is where real fortunes are built, and Fast Track is your shortcut to get in the game.
Yeah, it's been such a consistent theme across our platform. People probably getting tired of us talking about it, but the key is you get in the right room and you get a mentor. So you're saying, those people who are I wish I'd gone bigger, faster. They're probably not telling you to go buy a 50 unit on your own, immediately.
Right.
What we say is like, if you can just go find somebody like you and say, what are you looking for? You say, well, I want to buy 50 units. Okay. Now you go figure out how to buy 50. You go to figure out how to find 50 units. You go find 50 units, bring it to you and say, hey, here's 50 units. Can I have 5% in the deal?
Amen.
And in exchange for the 5%, I'll do whatever work you need me to do. And I'd like to learn. Or maybe you don't even ask for 5%. You just say, hey, here's the deal, but please walk me through everything that I need to know. And then you can, go tag along with Ashley and watch everything he does. And, maybe you learn from his mistakes, or you learn what mistakes not to make that way. And then you can maybe go buy something. But I think that's such a good point, because people talk about that. And we started with, I started with a little tiny house, and then I bought a duplex, and then, another duplex, and then another house, like all this stuff. And every time I buy something, I learn something new. And then we stepped into warehouses. We bought a $250,000 warehouse, very small, and we learned a bunch. And so like, I can't imagine buying a $2 million deal and learning the lessons I learned on the $250,000 deal, because it might have ended us.
Right.
So it's like, each one is a stepping stone. So like, the sooner you can go bigger is definitely better. But at the same time, I don't think there's anything wrong with, going, like you said, one at a time, building something small, and then eventually you could sell it off and transition into bigger. But there's so many lessons that you learn.
Yeah.
I guess the key is just like get in the game.
You got to get in the game. Yeah. I have two thoughts that your last point made me think of. One is about being mathematically eliminated, and the other is about access to money. But the first one, the reason I wanted to go bigger is, it was working. I got in there. I saw the power of it. It was actually making a difference in my life. But then I started realizing, okay, wait a minute. These are my financial goals. I'm this age. I'm already mathematically eliminated from achieving this lofty goal that I have, unless I somehow increase the pace. And so I've got to have more units, bottom line. And so that led me then to trying to buy this larger place. So this was the 32 unit place for me, that I went from the 10 unit to the 32. Well, believe it or not, I bought that place for $1.2 million, 32 units.
Wow.
In 2018. And oh my gosh, I wish I could buy a million more of them. But
in Wilmington?
No, that one was actually near Campbell University in Lillington, North Carolina.
Oh, okay. Yeah.
And I still own that. And that was a direct to seller mailing campaign. That's how I got that connection. But when I so 1.2 million at that time might as well have been 1 jillion to me. Like I didn't have the money. I couldn't even conceive of buying something that expensive. And so I think I needed $350,000, or it was actually like $335,000. And so I was reading all these syndication books, and I say, here's what I'm going to do. I'm going to get 7 people. They're going to put in $50,000 a piece, and we're going to go buy this thing. And so I got it under contract, and like, all right, now crap, I got to hurry up. I got to raise this money. So I call a buddy of mine, and I've known this guy, since college, and I know his family, and we have a strong relationship of trust, and we're friends. So I said, hey, I got this place. The numbers are good. The math makes great sense. Would you like to go in it with me? And, sure. Tell me the details. So I told him, we need like $350,000 to make it the down payment. And he said, yeah, well, we'd like to be in. I said, okay, well, you think how much you want to put in? Like 50,000? He's like, well, I mean, if we do it, we're probably just do it all. And my head exploded. I'm like, wait, what? Like with one phone call, we're done. And, So that right there, so my limitation to getting me to that point was not realizing that I had something that people wanted. Like the people that have the money, they want Graham and Jesse and Ashley to go hustle and find these deals because they need somewhere to put their money. And I tell myself, like, look, I'm almost doing my relationships a disservice if I don't bring this to them. It's not that I'm coming to them begging and asking for money. I'm coming to them with something that makes their life better. And if I don't do that, then what kind of friend am I?
Yeah, that's such a great point. And to piggyback off that a little bit, there's a book, I can't remember what book I was reading, but anyways, they talk about how you should also have that attitude going to the bank, which was kind of like a mindset shift for me. It's like, you shouldn't be begging and crawling to the bank. They need good operators to lend money to so they can make a return. And I was like, that's crazy.
Absolutely.
But yeah, going back to what you talked about your deal, I think that's definitely a limiting belief for a lot of people, including us. Like we were like, oh, well, we couldn't buy this building and, we need too much money or we got to raise this money or whatever. And it's like automatic, like you said, programmed to think like in $50,000 increments. I probably would have thought the same thing. If you don't mind sharing, how did you structure that deal? Did you like, cause they talk about in the group, you can do 50-50 and then you pay a pref or all that stuff. Like,
yeah, I don't mind. That one I actually ended up with, I own 50.1% of it, and the money folks own 49.9% of it.
Nice.
And, I set out thinking like, well, I'm going to own 75% of it and we'll give them 25%. And by the time we got all the way through it, the negotiations and the deal, it worked out to be that. And it's turned out to be a fabulous deal for everyone. And yeah, I mean, it could be anything. I've syndicated a deal, the 37 unit, I own 40%. I'm the general partner and own 40%. And the limited partners own 60%. The one that you saw me present in Cleveland, the limited partners own 80% and the general partner owns 20%. And the general partner, I'm the largest percentage of the general partnership, but I'm not the only one.
Yeah, that makes sense. So with that 49-51, was there any pref or was it just straight equity, like split like that?
Yeah,
like
just basically there was an LLC created and there were two members and we were it. And that's, there was no pref, there's no nothing, when they get paid, I get paid and vice versa.
That's awesome. That's I like that level a lot. Like I don't, I might look back and regret saying this, but I don't think I'll be syndicating. I'd like that level of like, you knew the guy, you had a good relationship with him. That's kind of what me and Jesse want to do. We want to go buy deals that are, decent size and have a relationship with the person we buy them with. Yeah. Be like, we know this guy's our friend. We hang out with him or whatever. It just so happens they make a lot of money. They funded the deal and they get a big portion of it, but we run it and operate it. And like that's kind of the game I'd like to play. And so that's really appealing. I'm curious, something we've always wondered. We like to try to stay as simple as possible, and real estate can get complicated very fast. So like the structure you just mentioned is simple. That's why I like it. But when you're buying these things, are you doing a property specific entity every single time? Or do you have like a real estate investment company that your company owns a share of the LLC or whatever? I've seen people do it different ways.
Yeah. So when we started out, those places in the student rentals that I told you about that my dad was doing, that one had one LLC that owned like, 20 houses. Or it was pretty close to 100 units. Then I had some others that owned 3 or 4 houses. But now everything I do is a property specific, like a single asset entity that was created just for that purpose. And definitely when you get to the larger deals, the lenders will insist on it. They won't even, it's not even an option. You have to do it the way they say to do it. But now, I have an LLC that owns each one. Just one asset currently. Okay.
That makes sense. We were just wondering if there's a way around that. Cause it's like, then you got to pay for a tax return per property. And like, you have so many different, like it makes accounting and like all that logistical stuff so much more complicated, but I guess it's just part of the game.
Yeah. I live it every day. It's one of my larger expenses, but you're right. I haven't figured out a way around it. And I think it's probably, for me, it's a comfortable way to do it. I think you could do it. There's no law that says you can't have one LLC that owns multiple things, but what you realize then is the financing gets a little trickier. And if you want to, it limits what you can do in the future. If everything's like tied up in one entity and you want to sell one piece of it and there's a loan on this, it gets, it's too complicated. You're more mobile. You're more agile if it's just one thing.
Yeah. So talk to us. I want to talk about the big deal that you presented on. Tell us a little bit about that deal. Like just, I guess, some of the general numbers of that deal, what you bought it for, the units, all that stuff. And then also talk to us about how you found that deal.
Yeah. Well, I found it through broker relationships. So that one was listed and with a broker, and I got in the game, and I don't know how many offers there were, but there were many. It was multiple offers, and it came down to the best and final round. And we kept progressing, and they finally awarded us the deal. So it was pretty exciting. I still remember exactly where I was when they called me and told me. This is pretty cool. But it's 196 units. It was built in 1973. It's in Jacksonville, North Carolina. We paid roughly $108,000 per unit. So which is like $21,250,000. And I told you the structure is 80-20 split. So we have Class A shares, which is the limited partners, and they own 80% of the entity, the LLC. and then the general partners own 20% of it. We bought it in February with like you call it bridge debt, I guess, or short-term debt. And with our eye on refinancing it to a HUD 223F loan, which is a 35-year fixed rate and a 35-year amortization. So the cash flow really is it's kind of a jackpot situation. The trick with that is it just takes a really long time to get that loan, which is why we had to buy it with short-term financing to bridge that time gap. But we're working on the appraisal now for the refinance, and it looks to me like it's not in yet, and knock on wood, I shouldn't even say it out loud, but it looks like the appraised value is going to come in north of $24 million and maybe even approaching $25 million. And we've owned it since February.
That's incredible.
So it's pretty amazing. And that was more like an operational value add. We were able to make improvements. We were able to reduce costs. We increased the revenue also a little bit. Now's not a great time to be raising rents, by the way, but we were able to restructure some things and get our new leases are signing at higher rates all in. But we saved money on things like insurance and payroll and stuff like that. We've increased the occupancy. So it's been more of an operational value add for us. So the NOI is higher than when we bought it.
Yeah. That's amazing. So for people listening, just to break that down a little bit, in commercial real estate, like we talk about, it's valued on the income completely. So if you're dealing with like a triple net deal, then your taxes, insurance, and maintenance are on the tenant generally. So like if you buy it, the base rent's the base rent. You can't really decrease expenses. Maybe people will factor in like management and stuff. But on a multifamily property, it's the opposite of triple net. You're paying for everything. You're paying for taxes, insurance, the maintenance, upkeep of the amenities, all that stuff. So any way you can decrease your expenses is going to increase your profit or the NOI. And obviously once you increase the NOI, it increases value. So you can buy a property, not raise a single rent, and just operate it more efficiently, and it'll go up in value, which is something that I think that's a plus of multifamily. I think that's really cool. Yeah. So how did you get, like the mental mindset shift from buying a duplex to a 10 unit to now taking on, having the, for lack of a lower term, but just having the balls to go after a almost 200 unit apartment complex? Like, walk us through that.
Man, I don't know. I that it's been a wild ride for sure. And I just, it's kind of like, it's something that I always wanted to do. I know the math, and I like truly believe that if one person can do it, then I can do it. And I see taking nothing away from people who have done this before and been more successful. But I look at them and I say, they're no different than I am. I mean, they're probably smarter than I am, because most people probably are. But what they're doing is not that complex. It's pretty simple if you break it down. And so I'm just going to give it a go. And, I put one foot in front of the other, and if I can get from this step to the next step, then I keep going. That's kind of and I remember doing that specifically, vividly. I remember doing that same thought process on that 10 unit place back in 2013. Like, I'm going to make my offer. I hope they take it. It's a little bit low, but I know the math works. So I made my offer, and they didn't take it right away, and we kind of haggled, and we just kept going and kept going and kept going. And again, at that time, the 10 unit place was as big of a mountain for me mentally as the $21 million place it was in February. And so I kind of just remind myself, all right, well, you can do this. Would it have been bad if it had gone south? Yeah, it'd have been pretty bad. But again, we were conservative enough that we just didn't think that it would take a catastrophic world event for it to not be okay.
Yeah. And with multifamily debt, it's non-recourse, right?
Correct. Yeah. The long-term debt, the bridge debt can go either way, but the long-term stuff like the HUD or Fannie Mae, Freddie Mac stuff, that's all non-recourse debt. Yeah.
That's awesome. That's one of the biggest benefits of multifamily. It's like you go buy industrial. I don't think you can get maybe you can if you're a strong enough borrower, but we haven't seen it yet. So that's really cool. But I love your attitude towards that. I think that's how me and Jesse are as well. Like, I don't think either one of us would claim to be the smartest person ever. Definitely not. But people have asked us in the last year, because we bought several buildings, like, how'd you guys do it? Like, acting like there's some kind of secret or something. It's like, we just kind of did it. Like, we just went for it. That's like exactly what you're saying. We realized that all these people buying deals are no different than us. The only difference is that people, like, it's just action. Like, you either take action or you don't.
100%.
And if you just get in there and go for it, like, obviously you should do your research and be cautious and conservative and consult with people. But once you've done that, just go for it. Then you'll learn so much along the way. and then eventually get to where you're at. Like hopefully get,
Yeah, I
$21
think
million
that,
deals.
well, a small piece that we're both not saying is that, Ashley's very conservative. He set up a lot of things to make sure, he didn't fail on that $21 million deal. Graham and I have brought in an investor on the side to, if we needed to cover the payments or something while it's vacant, because we've been buying vacant buildings. Like, that's risky of itself. Like,
Okay.
we've just set up things and been organized so that we don't fail. And if you set things in place like that, like, and a lot of that comes from, like we said, environment, talking to people like Ashley that have done this a bunch of times, and then taking action based off of that advice and listening to other people's mistakes. So I think for people out there, just, at some point you do have to just take the jump. But once you get all the information, you're going to be fine.
I definitely agree. And, I'm a proclaimed like real estate geek. The podcast, like if I'm cutting the grass, I'm listening to something that has to do with real estate. If I'm reading a book, it probably has to do with investing in real estate. And so and I know most people aren't like that, but you can there's plenty of resources to educate yourself, like your guys' podcast. I mean, people are going to listen to this, they're going to learn and gain a little bit of confidence, and maybe something that we say spurs them into action. Maybe they give you a call and say, hey, I want to go with you, or whatever. But yeah, that's the key, is just you got to do something. You got to take some kind of action.
Yeah. 100%. I think a lot of people invest in real estate are the same way. I'm obsessed with it as well. I'm always listening to books and podcasts and trying to learn the next thing, because you never know. Like, you might take away a nugget that could change your business forever. Like just one little nugget.
Right. So there's something I'm actually probably going to, not probably, I am going to film a video on this here in a minute. So if you see the video on YouTube and you see me in the same outfit, you'll know that it was the one that I, but another dynamic of this real estate investing that is unique to this asset class. In other words, you can't get it in stocks or crypto or other things, is this depreciation. And it's like mind blowing. Like in this deal that I'm working on in Jacksonville, we're getting ready to do our cost segregation study. Okay. So we'll do that. And I know this is a whole nother episode of talking about stuff like this, but the end result is going to be that when we send the K1s for 2025 to our investors, they're going to get, for $100,000 investment, there's a good chance that they're going to get a $50,000, negative on their K1, maybe more. And so that might translate, depending on someone's tax bracket, for a $100,000 investment, they might literally save $20,000 to $25,000 in taxes, cash money taxes, in the first year. And that's not a distribution. That's just like, so you think, well, if I can invest $100,000 and make back 25% of it in the first year, now I've really only got $75,000 in the deal. Like, that's like mind blowing stuff. And honestly, we haven't even advertised like on our returns. Our returns are based on just the performance of the asset. That's like all gravy.
Yeah.
And I only bring that up because the more you learn and the more you get into it, this real estate game is really mind blowing on many levels.
It really is. We just experienced that. We cost seg one of the deals we bought last year, and it basically wiped out my taxes. And I was like, you hear people talk about not paying taxes and stuff, and then it happens and you're like, holy crap, I cannot believe this is, I've told people about this as a broker, but you don't really believe it. And then you see it happen. You're like, whoa, like this feels illegal or something.
Yeah. I say the same thing all the time. I say, is this even legal? But it really is.
That's so cool.
Especially for real estate professionals like us, right? You guys are, so, the IRS called you guys real estate professionals. And for those people, it's really a jackpot.
Yeah, for sure. I'm curious. Do you ever see yourself, well, two questions. One, do you ever see yourself switching out of multifamily into another asset class? And then two, if you could give someone starting like a pitch on why they should start in maybe multifamily, if you think that's right, what would that be?
Yeah. So first, yes, I don't necessarily see me getting away from multifamily, because I think it's a fabulous asset class. I believe that housing, like shelter, well, it's not just me. It's obviously, it's one of the most important things to a human being, right? Is a roof over their head and a place to raise their family and to be safe. And COVID proved that when a lot of other things didn't get, people didn't pay for, they always paid their rent. Like we had maybe one eviction because of COVID, maybe. And I don't even really think it was because of that. But to me, that proved like, okay, people will stop going to the office. They'll stop buying, new clothes or new shoes, but they'll pay their rent. And so to me, I like that. But since I've been involved with the Commercial Academy and been around folks like y'all and other people there, a lot of you are into the like that small bay industrial and also like warehouse type things, and I really like that. I think it's interesting to me. I've never done it, but yes, I would like to get into that also in addition to multifamily.
Yeah. I love it. We haven't. So City Plat, the company we work for, has bought small bay flex. Me and Jesse have just been buying single tenant industrial buildings so far. But man, I would love to buy something like that. We're going to I don't know if you met Saul or Alan. Saul, I don't know how you say his last name, honestly.
Yeah, I think
something
I did.
with a Z. Yeah. Or Alan Schnur. They are putting on like an industrial small bay flex boot camp
Cool.
that we're going to in just like about 11 days. I'm super excited about that.
Oh, great. Yeah, that's awesome. Yeah.
Yeah.
Well, who knows? I mean, maybe I'll take my own advice and try to get in a deal with someone else who's doing it so I can learn that way.
Yeah, for sure. If I know, Jesse, what was it Joe Downs who does the storage and they do small bay flex and stuff? They invest in North Carolina. And I remember seeing that on their website, they had a small bay flex deal in Wilmington, actually.
Yeah. Wilmington is a hot market for that kind of stuff. I think the vacancy here on that kind of stuff is like less than 2%. It's amazing. Yeah.
It's nuts. Yeah, it's nuts. I like Wilmington. Like I said, I've cold called for some industrial stuff in Wilmington. So if I find something, I'll let you know.
Yeah. Let me know. I'll go out and take it. I'll go take a look at it. But you probably want to come down here and stay at the beach for the weekend. So
yeah. Or at least go surfing. Do you ever, I was curious, like, being at the beach, did you guys move there just because you love the beach, or do you like surfing or boating or fishing, or like, are you into anything like that?
When my wife and I decided we were going to get married and take that step, she's from North Carolina. I was living in West Virginia, and we decided, we want our life to be in North Carolina. All my other family is North Carolina. So that part was easy. And then, I was in real estate and she's a speech therapist, and both of those professions, you can pretty much get a job wherever you want. And so we were grateful to have that flexibility. And we said, well, we want to live at the beach. So we toured, we visited each beach town on the coast of North Carolina that was of any size. We were in our early 30s and we got to Wilmington and it was a no-brainer. Like, this place is awesome. And we've never looked back. We love it.
Yeah. Yeah. Wilmington, I mean, there's not really another city at the beach.
Not of this size. No,
yeah,
it's like Morehead City, Beaufort, Southport, but they're all very small towns.
Yeah, Wilmington's like the best of both worlds because you got Wilmington with the city itself, and it's got all like the regular city amenities you need, and then you also have Wrightsville Beach, which was my favorite. That's where I grew up going.
Me
then
too.
You got Carolina Beach, and
Curry
you get to Surf City pretty quick, and Curry Beach, all that. So it's awesome. I love Wilmington. North Carolina's really amazing place. People don't know or never been there. I mean, from the mountains where we went to school, like at Appalachian State, incredible. Wilmington, incredible. Like. Yeah.
Did you guys both went to App State?
Yep.
Okay, good. So my wife went there, and a lot of my family, and we actually have a house in Blowing Rock so we go there a lot. So my wife's family is from Valdez, which is like, right down the mountain, so to speak.
Yeah.
And interesting story, by the way. I love to trace these deals back. So I bought a house. So remember I mentioned I wrote this letter to the guy that I had the house listed, and I made him an offer. So I bought that house, little tiny house in Wilmington. And then my plan was to flip it. So I fixed it up. I was literally like hammering nails doing it myself, and tried to flip it, couldn't sell it. There was an issue with the driveway and an easement and all. Yeah, it got it kind of a messy. So like, all right, well, I'm going to rent it. So I rented it to this girl, young lady, and she actually signed it. She's like, well, can I sign a 3-year lease? I'm like, well, yeah, that'd be great. So then I decided I want to sell this house. And I talked to her. I said, hey, I'm going to sell it. Would you like to buy it? She said, yeah, I'd love to buy it. So I ended up flipping it to her, made a good bit of money, and was able to take that money and put it towards our share of the mountain house in Blowing Rock. So like I look back on how this real estate investment game has affected my life, and we have made more memories at that mountain house with my family and my kids growing up there like Christmases and Thanksgivings. And like, that's what life is about. It's not about like, what color is your Lamborghini going to be? Who cares? Right. It's about that stuff. And to me, like, I'm just so grateful that whatever led me to being in this industry, I'm very grateful for it.
Yeah. 100%. It was kind of a goal when we first started out before commercial real estate stuff. We were like, we're going to do Airbnb. We bought a duplex in Durham, did Airbnb. We're like, we're going to do one in the mountains. We're going to do one in Boone. I still would absolutely love to buy like a cabin in Boone or Blowing Rock. Blowing Rock's incredible because, like, you know, we went to App, so we want to go up to football games and stuff. But like you said, I want to create those memories. I have 3 little kids. You know, take them up to the mountains. We were going to go this weekend, but there's the first football game, so that might be a little nuts.
It'll be a little crazy. Well, we're going next weekend for my wife's birthday, the following weekend, and I'm always looking for apartments to buy in Boone too. I like that market, so if you ever hear of anything, let me know.
Okay, would you buy a 4-unit?
Yeah, I mean, I really would. I'd like to go bigger, but again, you know, we heard in Cleveland too, some people advising you, like, you don't always have to buy, you know, the $20 million place. You know, if it's a good deal, it's a good deal. If you can make money, make money. So the answer to your question is yes, I would.
Okay, cool. Yeah, we might have to talk. We got something maybe. We'll see.
Okay, great.
Cool.
Yeah.
Thanks so much for coming on here. If people want to get in touch with you, find more about, you know, what you got going on, what's the best place to do it?
Yeah, thanks. I think the easiest way is to go to our website, which is abgmultifamily.com. And then, you know, you can find all the other contact information from there.
Awesome. Well, thank you guys so much for listening to this episode. I think it's been a tremendous amount of value. Be sure to check out Ashley's website, and we'll see you in the next one.
Thanks, guys. I appreciate the opportunity.